Hello and welcome to the Unity Excel trading model live stream this morning or this afternoon, depending on wherever you are in the world. We will be live trading in the Forex market. We're going to be looking at the Euro US dollar. We're going to be demonstrating the Unity Excel trading model with MetaTrader 5. And with me this morning is Ren Vallow. How are you today, Ren?
Good morning, Mark. How you doing? It's good to see you. It's been a little while.
It has been a little while. We've got some new things to share, and I'm looking forward
Yep.
to going through them today with you.
Yep.
Have you had a look at the markets this morning? Nothing
Well,
much, really.
yeah, a little bit. I mean, at the currency markets, because I've been like looking at the Euro USD again, and that's been my focus. So yeah, I mean, markets have been kind of stale lately. It's been kind of back and forth, which is good for the mean reversion strategy. So I think we've been doing quite well lately. Again, we
Yeah,
finally got it dialed back in.
yeah, yeah. It has been the stock market's been very strange, hasn't it? Grinding higher.
It is. Yep. It's going
Uh,
up, but it's in a range, it's range bound, I think.
it's definitely range. I mean, if you look at the Nasdaq, actually, I mean, it's moving upwards, but it's difficult to tell if that's preparing to launch higher or it's going to do something else. I don't know. S&P is definitely range bound.
Yes, the S&P is definitely in a range, and I think the currency markets are, or at least the Euro USD is also range bound, right around that
Mm.
109, 110, which is perfect for any type of mean reversion strategy, and that's what we're running right now. So it's been paying off for us.
Yeah, exactly. Yeah, mean reversion all the way at the moment, so we're happy with that. So this morning we've got a couple of ideas. One thing I mentioned in the email, if you're on the email list for the Unity trading model, if not, there's a link below, is that I'm going to have a look at position sizing. And essentially I'm going to look at two different scenarios, one of which is every single trade is given exactly the same importance, in which case you should have the same position size on each trade, maybe equalized for volatility, but essentially the same amount of risk. And the next scenario is we assume that each successive trade is making the chance, each successive winning trade is making the chance of another winning trade following it more likely, in which case we want to increase our position size following a winning trade. Any thoughts, Ren?
Well, yeah, it kind of reminds me of the Monte Carlo system, like where you kind of increase your bets as you go up, and
Mm,
hope and pray that that's working out so that But it makes sense because, like, for instance, we've just kind of gotten into a nice range bound trade in the currency market over the last month or so, right? So
mm.
if we were increasing our trade sizes now, it would be a perfect time to do it because we're in that range bound mean reverting market. So you want to take advantage of the market the best way you can. And I think that's a good way of doing it.
Yeah. Well, the thing is about mean reversion, like we said, we're in a mean reverting period of time. I think it's pretty well established. I think most traders are aware of this, that um, there's this fat tail distribution, isn't there? That streaks
Yep.
can and do happen more likely, sometimes way more commonly than a normal distribution of random numbers. So if the markets were truly random, then we would expect no long fat tails, but in fact we do see them all the time.
Yes, we do.
So yeah, essentially we're looking at that and can we take advantage of it? So I've got roughly the scenario that we're running on our signal setup at the moment on the screen. So 5 minute Euro US dollar Bollinger Band and a couple of things, one of which is quite recent. That is getting that we spoke about last week or the week before, Ren,
Hmm.
offline, um, the Bollinger Band range. So we say we don't want to get into the trade when the Bollinger Band is too small, too narrow,
Right.
because it's not significant enough. On the other hand, we may well not want to get into the Bollinger Band trade when it's too wide as well, because that might be a bit too crazy for us and indicating that this is not a mean reversion opportunity. This is in fact a breakout opportunity, an opposite of what
Yes.
we're trading for. So we've got both of them. Initial results are quite positive, so I'm showing them on the scenario, and I'm going to zoom in for the people watching in the video. If you're watching live, please feel free to pop any questions, comments, or just say hi in the chat box. So we've got the, I'm going to just push on with this and we'll get on to the live trading. So we've got here 10,000 rows of data. It's not a huge sample size. We've got a couple of hundred trades showing here. And we're the significant thing that I'm going to just point you to initially is a profit target and stop loss of roughly 2 to 1. Reward is 2, risk is 1. So roughly, if they're both hit, then we can expect twice as much on a profit target hit to a stop loss loss. And I've got another thing, this thing down here called adjusted net profit. It's a bit of a crude metric, but essentially it is the actual net profit divided by the maximum drawdown. So it gives us a way to adjust for greater volatility expressed as drawdown. So it's pretty simple, and we can use it across different scenarios. So first of all, we are risking a very small amount in this scenario, 0.2% of our capital, and consequently the gain is quite small. So the first thing we can do very easily is we can increase our position size in the backtest. So I'm doing this by increasing the leverage, which means that once it has adjusted, we'll be able to see that the maximum risk per trade is now 1%. And our adjusted net profit is pretty similar to what it was before.
Yeah.
And I can increase that to 1. I won't go on for this for too long, but anyway, just to demonstrate my thesis and what I've found initially, adjusted net profit almost the same, but our actual net profit is higher. We're now risking 2% per trade. What do you think for a strategy like this, Ren, to risk per trade?
I like it. I think it's definitely worth risking 2% a trade for sure. The only thing that I would like to see a little bit better on this one would just be like to have the average win trade be a little bit higher, at least like getting closer to that average losing trade. But I do like what I see here. It's definitely moving in the right direction, which is good for us.
Okay, so all I've done so far is increase the risk per trade.
Yep.
Doing it via this leverage factor here.
Yep.
If I was to just go back to the initial amount of leverage and use the new feature, which I've been testing in the last couple of days, which is an escalator. So increasing, every time we have a winning trade, we increase our position size by the same amount again. So it keeps increasing, it keeps scaling upwards. And this is the initial result, which is not particularly great. In fact, it's showing a negative net profit. In reality, it's not doing too well in any scenario. It's not doing too well. But there is a reason for that, at least I think that is. And I can show you a different scenario here by increasing the stop loss.
Excellent. Yeah.
So you can see it here, and in fact the adjusted net profit is actually positive and is slightly higher than the initial base case. Yes, we are taking on more risk, but the adjusted net profit is accounting for that risk. Max drawdown is still less than 5% in this scenario.
Right. Yeah.
So yeah, and so I can take off that. I can keep everything the same, take off the position size escalator. And you can see here adjusted net profit, slightly lower, but still, pretty similar. Yeah. One more thing to do, and then we can move on. And I'm going to just put it in a slightly different strategy, effectively. So there we were testing the same strategy, the same series of trades, just with a different stop. Now I'm going to just change the actual strategy. And the only reason I'm doing this is because what we end up with is a strategy with more winning trades. So we would expect more streaks, etc., etc. So this is again the base scenario, and we can increase our leverage factor. I'm looking at adjusted net profit. It's more or less the same. So I'm going to go back to what it was before. Now I'm going to add in the position size escalator. So every time we have a winning trade, we increase our position size effectively. And you can see here, adjusted net profit has actually increased by quite a bit. It's now roughly double what it was without increasing our position size. That's gone too much, but if I was to reduce this here, it's not showing it particularly well. But anyway, the point is, if we have the higher the win rate and the more, in theory, that's going to have streaks, the better the position size escalator will perform. At least that is my theory for now. I don't know what you make of that.
Well, I think it's a good idea. I think it'll work well because when we get into these range bound markets that we really want to do well in, we're going to get a winning trade or two in a row, and so we're going to start increasing our risk is at a good time. And then when we start getting losing trades, we might be going into a trending market, so we'll start reducing our trade size. So I think it's going to work out really well. I like it. So yeah, so far so good. It looks like a good adjustment to the Bollinger strategy.
Yeah, the key thing is for a high win rate strategy. So a mean reversion, you should have higher win rates than a breakout strategy. So for a breakout strategy, it would not make any sense at all.
Right.
But for this type of strategy, maybe it will do. So I'm just bringing up the live.
The win rate's very good. So we're getting a really nice win rate. And I think that with Bollinger, on average over, running it live for a couple of months, it runs about 60% without any adjustments at all. So any adjustments you can make to improve the win rate is great. And then when you're winning is when you want to put the bigger trades up. So yeah, I really like the strategy, like the theory of increasing the trade size.
Okay. So now I've got the, once again, anybody who is watching this live, please drop any comments, questions, thoughts about anything we're talking about. I've got it into live trading mode. I'm using the 1 minute time frame here, so hopefully we get some trades while we're actually talking. Got the Euro US dollar on the 1 minute time frame, and we have the Unity Excel trading model here now streaming live data, and we know it's live data because I can see here the very last bar, which is 4:29 p.m. Eastern European time, which equates to 9:29 a.m. Eastern time, so 1 minute or less before the stock exchange opens.
Excellent. Yeah, and you'll notice you can tell that it is the up-to-date time on that one. Once it starts running, it'll go every 5 minutes, but like when you first start it, it shows you the time that it actually starts.
Yeah.
So that's cool. So that's your marker. That's where you started the live trading.
Yeah, exactly. So I'm doing it on the 1 minute time frame. We're not actually running on the 1 minute time frame in our live signal that we've got on MetaTrader 5. There we go. That's 9:30 a.m. Eastern. Let's see what happens.
Yeah, it looks like a very good set of data too. The win rate's good. Then everything's, and it's kind of what we're seeing, what we've been seeing for the last couple of weeks too.
Yeah. So here we are on the 1 minute time frame. We're looking for a trade outside of these bands. We'll see if we get that. I expect we will. It's been a pretty tepid open so far.
Yeah.
At least in the currency pairs.
Yeah, the markets themselves just seem to be going nowhere at the moment.
Yeah. Well, the only thing we know is that whenever this happens, whenever we have a tightening of the bands, the thing to expect and to plan for is when volatility does return.
Yes, and we'll be expecting it. It's like you go through those range expansions and range contractions, and we're in like one of those contracting periods of time right now. And the longer they go, typically the more the volatility builds up.
Yeah.
So you see like huge, like you said, fat tail moves after that.
Yeah. Well, there's a lot of people on both sides, aren't there? There's a lot of bears and there's a lot of bulls out there. I mean, I know there always is, but it seems so ever more at the moment with people with wildly different expectations of what will happen. So if we get this recession that's been long planned, will that affect stock prices, or how will that affect stock prices? On the other hand, if the Fed and the other central banks decide to stop raising interest rates at least, then how will
Right.
that affect markets?
Exactly. Yeah. There's so many like different ways to look at it. One could be
Mm.
very bullish and one's very bearish.
Yeah, yeah. So anyway, we're looking at the 1 minute time frame here. We've got zoom in again on MetaTrader 5. We're looking for, there we go, you can see my cursor. We're looking for a move outside the Bollinger Bands. These are standard. I'll just make sure we're on the right setting on the screen. The settings are all done in Excel, not in the actual terminal. So you can look at whatever you like. It will not affect your live trading. And
Yep.
so we are looking for a move outside these bands, but all the calculations are done here in Excel. Let's make sure it's visible. Let's try again. There we go. So we've got the Excel model here. You can see here we're using the 1 minute time frame, and I've selected that on a drop down menu here. I'm choosing a relatively small look back period, so that's just 1,000 bars of data, which is enough to calculate all our indicators and give us a little bit of historical data for our to look at and to make our decisions on for the recent time period. We've got a few different options here, including a minimum filter, which I spoke about a moment ago. So you can select all of that here. We can use time conditions. We can restrict the different times that the model is running for.
Yep. Yep. Yeah, we were just talking about that too, about the potential of restricting it around the market resets that we have on the East Coast, which was around 3 o'clock my time. So yeah.
Yes, there's a bit of a the data is seeming to suggest that there is better times of day, even for a 24-hour market. There is better times of day. The busier time of day seems to be when you're going to get bigger trades. Some of the out of hours, maybe the smaller trades and a slightly lower win rate. It does not mean it may not be worth it.
Right. It's just not worth your time. Yeah, that period between the US market closes and the Chinese market opening, I think, is a good time to avoid trading.
Yeah, that's what we're finding here. But you can easily do that. Anything that you could program into Excel, you can easily do that using the Unity model. And once again, if you want more information, there is a link below the video. You can find all about it. If you get on the email list, you can find the information and you'll be notified whenever we're doing anything like this. And you can get in touch with us if you want more information.
Cool. Got any questions today, or is there anybody out there who are watching live?
Comment here. Hi, Jace. Do you have any commodity futures strategies you have programmed into Excel? We looked at gold, didn't we? Not long ago.
Yeah, we've tried gold.
I think we've tried gold and we've tried silver. The moment, what we've done in these live streams is if we've looked at usually the euro US dollar, but we've also looked at cable, we've looked at gold, we've looked at silver. I think we looked at Bitcoin, didn't we, 1 week? So
we did Bitcoin for a couple of weeks.
Yeah, we're using broadly the same strategy in all of these live streams, but we've definitely tried commodity markets, particularly the gold and silver, and we've certainly done the equity indexes as well, in particular the S&P and the Nasdaq. Yeah, such as gold. Reading the next comment. Yeah, such as gold or oil. We have not looked at oil. No. Any thoughts about oil trading strategies, Bren?
I think that if we went with oil, with some of the commodity trades, we'd want to focus on a momentum trade versus our range bound trade, because a lot of the commodities do trend for long periods of time. Mm-hmm. So we have a couple of momentum strategies. We should probably revisit those for commodities and go back and look at it. So I feel like the currency markets and sometimes the indexes go range bound for long periods of time. But when you look at oil and gold, they tend to I mean, gold did have a pretty long time of consolidation, but they tend to go into these trends and they kind of just keep working one way for a long way in one direction. So
Mm,
yeah, I think we should go for a momentum strategy and start testing that out for commodities.
yeah. So while we were just talking, we've taken a couple of trades actually.
Cool. Yeah, I
So
see that. Yeah.
yeah, we missed those. Um, yeah, so we took a long trade, which was a small winning trade. We took a short trade as
Nice.
well, and I'm just going to bring the terminal back up. Okay, yeah, so we took a short trade here, close that there. We took another short trade there. So
Very nice.
taking two very quick profits there in the markets. We're on the 1 minute time frame here, so we're not expecting large winning trades. As we've said before, we're using the 5 minute for our own testing, which is working okay in fairness, isn't it? We thought initially, or I thought initially, we were going to have to use a higher time frame, but the 5 minute is giving us that balance between some decent moves, enough to beat the bid-ask spread, as well as consistent action, so we're actually getting enough trades to test and verify the strategy.
Yeah, absolutely. Yeah, over the last 3 months, we've had like 600 trades or so, and so it's been a good way to validate in live trading how it would work out. And we've had all kinds of things happen during that period of time, and we're still profitable, which is very nice to see.
Yeah, yeah, and we've been on a good run at the moment, like you were saying, because of the
Yep.
range-bound markets. So, a question from Kimberly: how does it increase the average winning trade value? So, I think you're talking about the position escalator. It's not actually in the live version. That was just a test version that I was doing. Demonstration that we may or may not include in the live version. How does it increase the average winning trade value? Well, it is a good question. You can measure already. You can measure in terms of the overall net profitability and the average trade size in terms of the number of points. We could do, if we're going to use that, you're right, we could do with another metric that looks at the average winning and average losing trade. We've got the average winning and average losing trade, but yeah, Kimberly, you raise a good point. So we need to be able to measure average trade value if we're going to use the position size escalator. And
Yep, that's a very good point. Yeah.
yeah, it is a good point. And Jace, can you do walk forward analysis with the Unity model? So Ren, how would you do walk forward for this?
Oh gosh, that is a good question.
So what it does do, it does back testing.
This is a back
And
test for the forward testing. Go ahead, Mark. I'll let you go.
I was going to say we can do back testing. This is where the Excel side of the model evolved from. It evolved from a back testing system, so it's very easy to do back testing. And because of the Unity interface, it means we can pull down data effectively instantly from your broker's data source. So if we're on the chart again, we can go through any one of, well, hundreds of different markets here. We've got stocks, we've got commodities, we've got indexes, we've got cryptos, and we've got lots of currencies as well. So we can pull down that data. We can use any time frame that is available. So that is anything from 1 minute to 1 month time frame, and you can use the data absolutely for free with a demo account, and that's available all over the world, globally. And you can use a broker, preferably one that is located in the area that you live, and you can get live data that is supplied by your broker as well, and you can get it straight into Excel for your back testing. So that's the easy part. Walk forward, I think the way we would probably do it now is we would use the demo version of the
Yeah,
model.
that's basically it. I know there are some other systems out there that you can like manually go through it, like hit play and go through the data.
Mm.
Ours, you're basically back testing all the data you download into the Excel. But if you want to walk forward, we do forward testing. So what you're seeing right now, what Mark's doing right now is forward testing. And that's basically your walk forward. You're seeing live trades being initiated by the strategy you've put into Excel, and it's happening live. Now you can do it in a demo account, so you're not actually using real money to do it. So in that case, we're basically walking forward in a scale of 1 minute time frames. And you can go down as low as a couple of seconds if you want to do a really, really fast walk forward, just to get an idea of your strategy. But this strategy, you can't back up like to yesterday and then walk forward that way, but you can still see the backtest data and you can see it live like we're doing right now. So you get both of those. So a replay is just re-downloading the data and going through it in Excel. And if you look at the Excel sheet, Mark can show you where all the trades are happening, which are recorded there. And they're also recorded in your MT5 system as well. So your demo account, if you have one set up, will record all those trades as well. So you'll see everything.
Yeah. Yeah. So just to follow up on what you just said there, Ren, you can download the data, yesterday's data, for example. You want to analyze in particular yesterday's open or close or the whole day. Just import the data. You can select how many bars of data, how many rows of data that you want to import. You select your time frame. You can use the time conditions, so you can select a particular time of day. You can also select a date and time down here. So there's another picker. I'm going to zoom in on the screen so you can see what I'm actually talking about. There we go. So you can see there are two further pickers down here. And first one of these selects the start date. So you can choose, say, the start of yesterday at midnight, and you can choose yesterday 11:59 p.m. and you can go through just one data using the drop down menu here. So you can use that to hone in on particular periods. You can do that on a day-by-day basis if you really want to have a granular impression of how your strategy is performing. And let's face it, sometimes you do want that because you need to understand exactly what it's doing in particular things. It's not always obvious why it's doing a particular thing until you actually go down and have a look. And you often need to look at it in different ways for it to make any sense. First of all, in Excel, maybe on the chart, then maybe holistically, you look at everything together and see how all of the things together add up to what's actually going on and what the best step is for improving it.
Yeah, absolutely agree with you there, Mark. Yeah, sometimes it's not clear what happened and why it happened, and you have to go back and dig through it and run the data a couple times to really understand it.
Yeah.
So,
That's the thing. To actually understand it is the key thing of whether it is making the right trades for the right reasons or the right trades for the wrong reasons, or the wrong. Yeah. Let's go through all of these. The wrong trades for the right reasons, etc. So
exactly.
any one of those plus more things can happen when you're trading, and especially when you're auto trading, and especially when you're using a intraday model such as this to automate your trading.
Yep. Yeah, I look at it as more of a trading assistant. It's fully automated, but it's always good to keep an eye on it.
Yeah.
You never know with technology.
Yes. Yeah, Jace, Kimberly, thank you for your questions. Any more questions, please drop them in there. So we've had a couple of trades, both of them winners, both small winning trades, but we're using the 1 minute time frame. Oh, we're in another trade.
Well, there we go. Yeah, we
There
got
we
another
go.
one.
Yeah. So in another trade, it's a short trade. So we've spoken about this. Whenever we get into a trade, there's always a bit of anxiety, isn't there? And
Yeah,
that's
even
whether
if it
it's
is
sometimes
demo.
whether it's a demo or a live trade. But
Yep.
one thing we've spoken about, Ren, quite often is the thing about letting the model do the work for you is that it is absolutely ruthless in terms of applying money management.
It is, and that's important because the emotions, even just watching this trade, I get emotional. So it's really good to have the technology take care of it for me.
Yeah, and that is not that's a major part of it, isn't it? It's having the discipline to do it every single time, and that is where an algo, an automated system is brilliant. It's maybe not as smart as we like to think we are, but it is disciplined, and
Yes,
that
it's very
goes a long way.
Yes, yeah. I would love to see it. Like, give us another winning trade here. That'd be fun.
Yeah.
Look at it
So
go.
so let's see how this trade pans out. We had we've had a candle that on the 1 minute bar that looks like it might reverse, but As soon as I say that, it goes back up again. But
I
it
know,
really
but
doesn't matter because we're demonstrating the principle. And
yeah,
if it turns into a losing trade, it's still demonstrating sound money management.
absolutely. And that's why these strategies work. The other beauty of it is you can look at Excel and you can see the rows and columns and how they're calculated. So it's not a black box here. It's something you can actually really understand what's happening.
Yeah, I mean, that's the thing. Black boxes are great when they're working for you. They're not so great when they're not working and you do not understand why they're not working. Like we said before, it's all open here, it's all Excel. And if I scroll back to the terminal, to the Excel again, you can see everything. There's nothing hidden here. You can see we've taken a new short trade. You can see all
Yep.
the rows of data, every step of calculating the technical indicators. You don't have to worry about that because we've got a library of technical indicators that you can use. But you can see all the steps, all the logical steps.
Yeah, that's the beauty of that's what I love about it. Being able to see what's happening behind the curtain.
Yeah, yeah, that's the thing. Exactly, yeah. So what's happened to that trade?
Yes.
Oh, it's still going.
Oh, it looks like
It's
we're going to get a, well, I don't want to, I shouldn't talk. I'll jinx it.
Yeah, it's easy. It's easy to, especially on the 1 minute. You can't
Right.
get carried away on the 1 minute because anything can happen. But what seems pretty clear to me is that we are going to have a tame opening. I'm not sure if there's any
Yes.
big data coming out. We're on a Tuesday today. We used to have Tuesday turnaround, but almost every day seems to be either grind higher or turnaround.
Agreed.
I don't
Yeah.
know whether
Yeah.
how good that pattern is at the moment.
We've been having a lot of back and forth. So yeah, we always kind of go for a turnaround Tuesday. That's why we pick Tuesdays
Mm.
for our live stream. But lately, it's just been that way every day.
Yeah, seemingly so. Yeah. I'm just going to quickly flip on to see what the Nasdaq is doing here, which you can always do, and I'll go on to the MT5. Nasdaq is grinding higher.
Cool. Yeah. Yep.
Yeah. S&P
Basically doing nothing.
pretty much. Yeah, doing nothing. I don't know what's dragging it down. Maybe the banks. I'm not sure.
Yeah, I think it
Anyway,
must be the banks that's holding it back a little bit, and tech's taking an advantage of the ability to move higher. But yeah, I don't think the S&P really has that right now.
yeah. So here we've got gold. Jace, to
Yeah,
your comment earlier, this was what gold would look like. In fact, it's responded very nicely
yeah. Look at
to
that.
the bands there. We had a big expansive move that was very quickly snuffed out, and we're right back in that trading range.
Yep.
Um, we had a big move down there as well, and I'm pretty sure we've got crude as well here. Let's have a look at crude. Here we go.
Yeah.
So I've got crude oil. The thing I notice on crude on this platform, with this broker at least, is the spread is quite wide relative to the size of the bands.
Right, and that's important to take into consideration when you're trading. It's like one thing we love about the Euro USD is it's got very, very tight spreads.
Yeah,
So your trades are if you're profitable, you're profitable. But yeah, with these larger spreads, you have to be very careful.
yeah, yeah. So I can actually just drag on the euro here over the top here, so you can see the spreads. It's the distance between the red and the green line. That's the bid-ask spread. It's nice to have a visualization. If you look at it on everything the same, the euro to my eye maybe looks about the spread looks about a quarter of the size in terms of the width of the bands.
Yeah,
I
that's
don't know if
very
that's totally fair, but it looked, yeah, the
that's a
bands
cool
are,
setting, Rick. That's a cool setting. I haven't tried that one yet. That's a nice setting.
yeah. It's useful when you're looking to put some manual trades in as well, just to get a feel for some of these different
Hmm.
different markets. So the euro is very tight. We know that. What about this S&P?
Wow.
Well, inevitably that's got a wide band because we've only just opened, but it's still pretty
Yes.
tight. It's still pretty tight, the spread there.
Yeah, the
Looks,
S&P is definitely a tighter market than say like crude oil. And
yeah,
gold can get some wide spreads too. And especially that's one of the problems I have with commodities is that when they get volatile, the spreads widen up quite a bit.
yeah,
I remember when oil was going down and it had a $40 spread between like a dollar and -20 or something and a -40, and it kept jumping around. So you're like I remember that one day where oil went below $1 or
Yeah,
went below zero actually,
it
and there
went
was
below
a
zero, didn't it?
yeah, there was a $40 spread at one
Yeah,
moment. So that was huge.
that was the day to own an oil tanker.
Yes, that was the day.
Yeah.
Oh my gosh,
Right, I've
the
got
one.
another comment, another question here from Jace. Can you do multiple symbol backtesting, such as taking the top three relative strength symbols in a large group of signals? Well, we certainly talked about this amongst
Yes.
ourselves, Ren. What do you think of that? Multi-symbol backtesting, such as taking the top three.
So you absolutely can stream in multiple symbols into Excel. So yeah, the problems you'll run into, I think, depending on how many you're streaming in, how powerful is your computer or your virtual private server to be able to handle that. Because the more data you pull into Excel, eventually your processor is going to be burdened by that. And then secondly, it gets complex when you're coding, putting your strategies into Excel. You have to take that into account. So yes, short answer is yes, you can do that. Depending on your processing power and your ability to code in Excel. If you're an Excel expert, that's not a problem. If you are not an Excel expert, but you have pretty good experience, then you would want to hire us to like help you code that because it'd be like a custom project. But yeah, you absolutely can do those things, and you could do as many symbols as your computer can handle. Um, I've done up to 10 symbols and had no issues, but you wouldn't want to go like 50,000 rows with 10 symbols running at 1 minute. It would slow down, I think.
Yeah, I mean, what you can do, just to pick up on what you were saying there, Ren, what you can do is, so the relative strength can be on a longer time period than your actual trading. So you could just analyze the relative strength, even on a daily time frame. Certainly, you can set the data to update in your relative strength analysis every 1 hour, every 4 hours. It's probably not going to change that much during this time period if you're looking for it to be a signal for when you look for trades. You start looking for trades as a filter for which symbols and which whether to trade or not. Then you could be streaming 5 minute data, say, and you could be using 5 minute data specifically, maybe just on one symbol, the best, strongest symbol, and you
Yeah,
can be looking for trades using Bollinger, MACD, candlesticks, moving average, any type of technical analysis you can imagine. You can be looking for trades, but it all comes from the longer time frame relative strength analysis.
absolutely. Yeah, yeah, I agree with that too. That's one strategy if you want to do that is to gather up all your information and then trade off that one symbol that you're trading. That's one approach that we like to use. And
Mm.
yeah, and adding indicators is basically just cutting and pasting the formula right into a column on Excel. So if you're good with Excel and being able to insert a column and paste a formula in, then you can do it.
Yeah, exactly. Yeah. Okay, well, Jace, thank you very much. Kimberly, thank you as well for your question. Anybody else got any questions? Pop them in now. Otherwise, we're going to end this live stream. I will just go back to the euro. Let's have another
Let's
look
check
at the
our trade
euro.
out. How's it making it?
Oh,
Oh,
look
there
at
we
that.
go.
We had a nice trade
Wow.
on the euro.
Hey, good one.
That was a short trade taken outside here. We're
That was,
slightly humorous about these trades on the 1 minute time frame
yeah,
because if that is a bit of a crapshoot, to use your
it is.
your favourite expression, right? Anything can happen on the 1 minute time frame.
Yes.
You do need to be a little bit cautious, but it's good because we want to show you what's actually happening in real time. There's no reason you can't use the 1 minute, but you just need to have a plan. Maybe you need to
Yep.
have a direction, and only trade in the strongest symbol, like Josie was saying there, in a particular direction. So you only want to trade an index when everything is pointing in the right direction to the upside. Then you can trade on the 1 minute. You could even trade less than that. There's no reason why not.
Sure.
But when we're doing set it and forget it type strategies, we're using the 5, and
Yep.
it's become our new favorite time frame,
Yeah,
really, hasn't it?
absolutely. Even the 6 minute, we've played around with that. The 5 and 6 minute are really good. You get about 10 trades a day. And yeah, it's a really, you can watch it. It's great. It's not so frequent that you have to worry about it.
Mm. Yeah, exactly. Yeah. And like we've already mentioned a couple of times today, this bid ask spread, we've got to be holding the trades long enough just in terms of time to be able to
Yes,
beat that bid ask spread enough that we're going to be gaining profits above the size of our losing trades.
absolutely.
Right. Okay. Well, Ren, thank you very much for being here again. I've had a good live stream. Thank you everybody that's been here on questions. If you want more information, there is a link below this. You can find all about it. If you want to get in touch with us, just drop us an email, ask any questions. If you've got any comments about anything we've done today and you're watching this on catch up, just get in touch. And Ren, we'll do another one of these soon.
All right. Thank you, Mark. I appreciate it. It was a fun one today.
Okay, great to speak to you.
Thanks. Take care.
All right, bye bye.